Salam, Tebe. Welcome back to One Wealth Outlook's market update for the first week of November 2021. My name is Sagar Kasuma, and today I'm here to give you our views and analysis on global and domestic markets to help you make the best investing strategy. Today, we'll be conducting our end-of-month review for Indonesian markets and assets in the month of October, as well as a brief update on key movements and changes in global markets. In the month of October, there has been growing consumer confidence and internal consumption. This resulted in an increasingly positive narrative for Indonesia for global investors. A number of key regions have also begun to open up for tourism, while others eased pandemic restrictions in direct response to improving infection and hospitalization rates, as well as accelerated vaccine rollouts. Now, global investors piled into Indonesia's stock market in October. Over $926 million of inflow into our equity markets represents the largest inflow since April 2019. And the Indonesian stock exchange authorities continue to have a strong IPO pipeline. With 40 new listings already as of November 1st, there are still 28 more targeted for the rest of this year. We should also take note of the recent commodities price boom as well. As a largely commodities exporting country, Indonesia has greatly benefited from the latest surge in prices of energy and agricultural commodities. Indonesia's trade balance consistently recorded a monthly surplus of over $4 million in the third quarter, thanks to strong performance in mining and oil-related exports. Now, there is a risk that this may slow down if China has slower growth due to recent Delta variant outbreaks triggering hard lockdowns, power shortages, as well as regulatory tightening that have dragged on manufacturing and industrial outputs in China. For the month of October, Indonesia's sovereign bonds have also been one of the top 3 best performing government bonds globally. Now, strengthening from a yield of 6.247 at its high at the start of the month to 6.033 at market close on the last trading day of last month. However, analysts and traders have started to view the Indonesian government bond as more expensive compared to its other emerging market peers. Now, this sets the stage for possible volatility and outflows in the near term, given the upcoming tapering by the Fed. According to the Finance Ministry, on November 1st alone, global funds sold $263.9 million in Indonesian bonds. Turning our attention to U.S. equities and global markets, earlier this week, the Dow Jones Index closed above the 36,000 level for the first time in history. Now, over the course of 2021, the Dow Jones has hit new record highs 40 times, the S&P 500 61 times, and the Nasdaq Tech Index 39 times. Though U.S. equity markets appear to be on a consistently upward trajectory, despite some volatility and hiccups earlier this year, the market is becoming increasingly wary of the looming tapering and potential rate hikes by the U.S. Central Bank. Now, such statements by central banks will be in sharp focus for markets moving forward into the rest of this quarter and the next year. In November's most recent FOMC meeting, Federal Reserve Chairman Powell announced imminent asset purchase tapering, starting this month and expected to finish mid-2022. Having emphasized the substantial progress made by economies in recovering from the COVID pandemic, Chairman Powell and the Fed both appear confident in scaling back monetary support. However, he, unlike some of other central banks so far, has been clear to convey that no rate hikes are imminent thus far. This seems to have prevented a taper tantrum, and we see global equities climbing higher in the days after the FOMC meeting. The reduction of Treasury security and mortgage-backed security purchases have been long telegraphed by the Fed. But an acceleration of this tapering or any further speculation of rate hikes in response to, for example, inflation, may be a trigger for further volatility. Having said that, in this current market, we are still optimistic and positive on domestic and global equities based on technical indicators, namely the Santa Claus rally. Historically, the last 2 months of the year have been positive for U.S. equities. For the rest of this update, we will take a look at the widely covered and anticipated COP26 event in Glasgow. This climate change conference is occurring on the backdrop of simultaneous energy crises in Europe, in China, as well as WTI Brent oil climbing to its highest level since 2014. Now, we believe that the material and practical costs of transitioning to net zero will likely be a gradual process, and thus far have limited impact on Indonesia's financial markets in the near term. But regardless, President Jokowi appears to be committed to Indonesia achieving said targets set in the Paris Agreement and Net Zero Pledge, namely through large-scale projects such as developing the largest solar power plant in Southeast Asia and construction of the world's largest green industrial area in North Kalimantan. From us here at OCBC NISB, that is all for today. This has been the October One Wealth Outlook Monthly Review and simultaneous brief weekly update. To follow more of our market updates or access our weekly market journal, click the following link, as well as follow us by clicking the subscribe button below. I am Sagar Kusuma, wishing you a lovely weekend. Salam, Taya Tebe.